What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. It is finally Friday, and it's finally time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the news and the technical chart patterns from all the major FAANG stocks. Folks, we had a lot of news this week, including potentially a TikTok ban just weeks away here in the United States. We'll talk about that. We had most of these stocks skyrocketing, including Amazon on the back of strong e-commerce sales, and Tesla up another 9% this week. We've got a ton of OpenAI, Microsoft news. Better not waste any time. Kick things off like we always do with Meta Platforms. Start of the week at 583 and found support. Was up nearly 7%. Finished the week at 623 and some change. We talked about how a federal court upholded a ban on TikTok. TikTok went to a federal court and argued that the ban is against the First Amendment here in the United States. A tad titch of irony when you've got a company that is based in China coming to the United States and arguing for First Amendment rights. Now, all that aside, the federal judge pointing out that there are United States security concerns here, and this will likely get pushed up to the Supreme Court. We'll see if the Supreme Court decides to take this on. My guess is based on the makeup of the Supreme Court, probably not going to be super open to allowing TikTok to continue to operate, although I'm not a Supreme Court expert and certainly not an attorney. We'll see what happens. Some key dates, though. You have until January 19th to potentially get an extension from the president. Now, the January 19th date is very interesting because I believe it's the following day, January 20th, where you'll have a new president inaugurated. So it's actually on Joe Biden's desk to potentially grant a 90-day extension based on maybe progress toward a qualified divestiture. Now, obviously, these things can kind of take time. You've got to find a buyer for this thing is worth tens of billions, hundreds of billions of dollars. Some people might even value TikTok at over $1 trillion. So the number of companies on earth that can actually afford a majority stake in this is pretty much only the companies that we talk about on today's show. So we'll see what happens here. But I tell you what, if you get any type of ban here, obviously we've talked about it here, certainly benefits Meta. I think you look at some of these smaller social media sites like a Snapchat, their stock has been so beaten down that a stock like this has to benefit from a user's perspective. And you've really seen over the past month or so, shares have caught a bid, maybe in potentially front running this decision. Now, James Cameron's firm, famous movie maker, also has, I think, like a Rolex watch that is, it's not formally named after him, but it's known as the James Cameron. But he and his firm are working with Meta to create an experience for Quest VR headset. Now, also on the fact of VR, MR, XR, whatever they want to call it. But you have those glasses. That production is going to move to Vietnam from China. Some of this is a cost-saving thing, but you're also getting out in front of tariffs as well. Now, the company is planning to build a $10 billion AI data center in Louisiana. That would actually be its largest data center to date, and certainly one of the largest ones here in the United States. It is also working with a public company called Entergy. That ticker symbol is ETR. This company potentially providing some power generation for the company. Also, Meta planning to offset a lot of its electricity use with 100% clean, renewable sources. So there's been, some theories that when President Trump comes into office, it basically throws the solar business out into the trash and there's no need for it. Actually, if you look in the Trump administration, one of the best performing sectors was actually alternative energy. And the worst performing sector was traditional oil business. So be careful what you wish for and be careful who you listen to. Oftentimes the consensus, especially when we're talking about Trump, tends up being wrong. You will have a lot of news and a lot of hype around nuclear energy, but in the short term, traditional energy and alternative energies or clean energy like solar and those types of things will rule the day. Now, the company unveiled its new Llama 3.3 AI model. I noticed ads. I can't remember what I was watching on TV. Maybe it was like a football game or something, but Meta's actually advertising their open source Llama model. So they're putting a lot of money behind this, but this new 3.3 model can outperform, at least according to Meta, can outperform other models like Google Gemini, OpenAI's ChatGPT, ChatGPT, Amazon's, other models out there. What's interesting is this is a 70 billion parameter model, and the company is saying it outperforms, and it's obviously lighter weight and easier to run than its 405 billion parameter model. I think we're seeing a little bit of plateauing in terms of model capability, but they are able to start fine-tuning these things so they're not this behemoth of a program, and they can be fine-tuned by whatever company wants to do it. Now, very interesting. Mark Zuckerberg wants to have a, quote, active role in Trump's tech policies as these tech companies are not taking an adversarial stance against Donald Trump, possibly because they looked at the electoral map and saw that the vast majority of Americans actually agree a lot with what President Trump is going to try to do. Now, moving over to Apple, start of the week at 238, up just, I mean, this is a pretty good gain for a company that's worth $3.6 trillion, but it's a run-of-the-mill 1.65% gain for Apple to finish the week at 242. Now, the iPhone assembler, known as Foxconn, they saw its November revenues climb by about 3%. They gave strong outlook. However, we noticed that quarter over quarter from October to November, we saw sales decline by about 16.43%. We saw a lot of negative press this week on Apple software, and I've even noticed it on my phone. There's just a couple of things that just don't seem that great. Again, a $3.6 trillion company, you'd expect them to get these things right. Maybe Apple will tune those things up as we move into next year. Now, the company is set to invest $1 billion in a manufacturing plant in Indonesia. Now, you've probably been following this story here on the channel. This is a masterclass by the Indonesian minister, whoever this guy is. This guy deserves a Medal of Freedom in the country of Indonesia. I mean, initially, Apple came to the table and said, we're going to invest $10 million in Indonesia because Indonesia passed some kind of rule that the iPhone would not be able to sell in the country because the vast majority of the parts aren't made inside of Indonesia. So Apple said, well, we'll invest $10 million. And Indonesia basically said, no, thank you. And then Apple came to the table and said, we'll do $100 million. And the Indonesian president looked at the financials at Apple and they said, nah, I think we can do a little bit better. And so Apple is going to come to the table with a $1 billion investment in the country. Hats off to the Indonesia population. That is government at its finest, and hats off to them. Now, Apple's smart display product. This is a product that has been rumored to maybe come to market, certainly in prototype phase at the Apple headquarters. It is an Alexa-type device with a screen, probably some speakers. I've heard some things where it has some robotic features where it might be able to follow you around and kind of move. I don't know if that's going to be the case, but this is delayed until Q3 2025 when some analysts projected it potentially this year. Now, Apple is making its roadmap for its in-house cellular modems. This has long been something that Apple has wanted to do and has been rumored to do, potentially challenging its licensing agreement with Qualcomm. Qualcomm generates a lot of revenue, billions of dollars from Apple, obviously licensing its cellular modem technology, and Qualcomm has kind of been preparing for several years for Apple to break out on its own. We'll see. This is I would say this is somewhat risky for Apple. Risky in a good sense and in a bad sense. Risky is if this works out, it adds probably several points of gross margin to every phone that they sell. Also potentially gives them competitive advantage other handsets. But if they roll out a phone with its own cellular modems and these things suck or they provide a lot of problems for users and users are upset, well, that obviously is not something that is probably worth the money. Now, Apple executives do a rare thing, and they touted Amazon's AI chips. This is in a rare endorsement. Now, this may or may not be a good thing, considering I've heard a lot of reports. I don't have one of the newest iPhones. In fact, it's filming me here, so I can't pick it up. But what I've heard about Apple Intelligence is it absolutely sucks. And so I haven't seen a lot of glowing recommendations about Apple Intelligence. My guess is it'll probably get a little bit better, but they are using Amazon's AI chips, and it could be a software thing, could be an Apple thing, could be a data thing, but we'll see if it gets any better. But I thought it was interesting that Amazon getting a hat tip for the AI chips. Now, speaking of Amazon, start of the week at about $210 per share. Boom, up 7.67%. Finished the week at a 52-week high, $227 on Amazon. What's market cap on this one? About $2.3 trillion. Man, that one's really on fire. Now, the Cyber Monday sales came in. This was just for Monday at $13.3 billion estimate. I know I was on the phone. I was buying a couple of things from Amazon. I was buying stuff from Nike and other places as well. And we're seeing strong across the board. We're seeing strong commentary from Lululemon. Foot Locker was a little weak, but in general, we're seeing retail see some strong sales numbers, and a lot of those stocks actually have been beaten down. Now, the company unveils its new training chip, and they're partnering with or pairing that with Anthropic, the AI company that they have a large investment in. Amazon's probably training chips. They get beaten down a little bit when you go to the tech blogs and those types of things. But obviously with Apple using them, there's certainly a market here for this. And Amazon's actually hasn't been at this maybe as long as Google has. But Amazon obviously has some custom silicon chops to be dealt with. Now, Amazon is seeking to work with news outlets to improve its new Alexa AI assistant. So this is the trend that we're seeing across AI. You search ChatGPT now, and you can search something in the news, and it will search different news sites, and it'll actually give you very current things. At one time, as most of you probably remember, you could search ChatGPT, and there was like a cutoff date. In fact, they told you like the cutoff date. Now it's pretty up to date, breaking news. Obviously, if you're using Elon Musk Grok inside of Twitter, it has a lot of obviously updated information on there. And obviously, these news outlets, they're going to turn this into, I think, a pretty decent revenue stream. Now, this was underreported across financial news media, but Jeff Bezos is back, baby. He's saying he's putting a lot of time in over at Amazon to help it become an AI winner. He sat down, he talked about President Trump, talked about AI, and he talked about coming back to Amazon and spending a vast majority of time actually at the company. 95% of his time at Amazon on AI. So Jeff Bezos is back, very similar to what we saw at Google with the two founders coming back and working almost on a daily basis. Moving on to Netflix. Start of the week at $8.96. And what else is new? Netflix is up big time, up 4.25%, finished the week at another 52-week high, $934 per share. I mean, we just have shades of 2021, 2022 over here, where every week these stocks are just moving higher. Now, Roku, competitor to Netflix, says that its data, the company didn't say this, but Needham saying that its data is its most undervalued asset, and the company is prone for a takeover in 2025. We'll see who steps up to the plate. I don't think regulators, even under a Trump administration, will allow a Roku Netflix combination, but maybe potentially some of these other media companies, maybe a different play. I've heard rumors maybe of Amazon, maybe one of these other big tech companies decides to make a play for Roku. We'll see what happens. Moving on to Nvidia. Start of the week at 139. And what happened? Nvidia, every other stock is rocking and higher. This one up just 1.8%. I mean, this is what happens when you get to a $3.5 trillion valuation. A 1.79% gain is still pretty good, and we ended the week at 142.44. Now, Taiwan Semiconductor and Nvidia are in talks to make the AI, not just AI chips. We're talking about the leading edge Blackwell AI chips. These potentially might be made at the Arizona plant. This is a taxpayer. Makes me so happy. Props to the Biden administration. Props to the House and Congress. I think this was a bipartisan effort to pass the CHIPS Act, and props to giving the money, not all of it, but you did make the right decision, gave money to a very capable company. We'll talk about an incapable company here in a minute, but Taiwan Semiconductor obviously is proven itself to be a prolific maker of computer chips. They have set up this fabrication facility in Arizona, and they're already making leading edge chips inside of there. And by next year, you're probably going to have volume production out of that facility. As a taxpayer, this is exactly the type of money. If we're going to give it to corporations, this is the type of results that we like to see. You also want to see Nvidia and TSM on the semiconductor show later this weekend from a technical perspective. Now, a company that is run or used to be run by an absolute moron is Intel. And as a taxpayer, we gave this company way too much money. They've never proven that they can actually manufacture chips at scale and certainly profitable. And finally, the board of directors took my advice I think I've been calling for Pat Gelsinger, now the former CEO of Intel, to be fired for at least 2 years now. If the board of directors had given me a board seat, and I guarantee you, whatever the board makes at Intel, I would accept 50% of the stock-based compensation and the salary, and I would even pay for my own flights or my own travel to San Jose for the board meeting, since it's only about an hour and a half away. I would be one of the cheapest and most economical board members, and we would have gotten Pat out of there about 2 years ago. And what we would have done is we would have separated the foundry business and divested away from a lot of these other companies that Intel has just seen wither on a vine over the past several years. Now, this could make Intel, surprisingly enough, a buying opportunity. I think Gelsinger being out paves the way for the company to divide itself. Now, is it a good investment? We'll have to go back and look at history. Companies like IBM, HP, these companies come to mind as once behemoth that were then kind of pieced out and broken out and sold out. We'll see what's left of Intel, but it could be a company that's worth investing in. Now, speaking of a company that is worth investing in, is Nvidia just invested in a very exciting AI data center company. In fact, if you had read the newsletter on the 5th when it went out and bought the stock, that stock that we recommended in the newsletter was up 18%, 18% today alone. So you'd be up 18% on your investment. This is currently a free newsletter. It won't be free for long, but get down in the description, find the link to the newsletter. Again, our recommendation earlier this week is already up 18%. Nike, I believe, is up about 8% since we recommended that back in October. So we've got a track record here of success. This is free for now, and we will be giving a deal to early subscribers, a deal that will only be available for a certain period of time. Low-cost subscription model to those that are subscribed early. So make sure you subscribe so you can take advantage of that when it comes to fruition. Moving on to Google, start of the week at 170, casually up 2.5%, finished week at 174. I heard about these a while ago. These are AI-generated weather forecasts by Google, and they're starting to release some of the results that these AI-generated weather forecasts, as you probably could imagine, because they can take in so much data and use a bunch of history to kind of project these things are blowing away traditional models. Not only that, but they can produce a 15-day forecast faster and more accurately than other weather prediction systems. So I think the only thing this is bad for, if you're in college right now studying to be like a meteorologist or something like that, this might be bum news for you that AI is certainly going to eliminate some meteorologist jobs. But I tell you what, this is cool. And if weather gets more accurate, in the long, we can think of this like really kind of big picture. If weather forecasts become more accurate, well, for business, that will be very, very good. Also, human life as well. If there's a big storm coming, we can let people know more in advance, and maybe they believe the computer more than they believe these meteorologists these days. Now, Google breakup is still a possibility for the incoming EU competition boss. So in the EU, we've got an outgoing, and now an incoming competition boss. Everybody is just taking shots at Google. It is down right now. I don't think it's going to stay down for long. Any weakness in Google, I think, should be bought. They've got this Waymo division that's going to expand full self-driving, or these driverless taxi service, to Miami with an Uber-backed process, or Uber-backed company, excuse me. Now, one interesting thing I saw with Uber, just kind of randomly, as this stock got hammered this week, down 8.5%, down to $66 per share. You're getting close to a 52-week low on that one. You might want to check that one out if you like Uber. Moving on to Microsoft, start of the week at 424, up over 4% to finish the week at 443. We found some footing technically. You want to stick around and look at that. Now, OpenAI is kind of thinking about removing its AGI provision or clause with Microsoft to unlock more potential investment from Microsoft, the giant. Now, if you're not familiar, what's happened is when OpenAI made an agreement to have Microsoft come on as an investor. This was like maybe about 2 years ago at this point. Microsoft made that now infamous, and we'll talk about it here in a minute. The FTC might think about cracking down. It was such a good investment. You know you made a good investment when the FTC comes back and say, well, that might have been too good of investment. Microsoft's agreement with OpenAI allows Microsoft basically exclusive access to use OpenAI's tools and models inside of Microsoft software. However, once OpenAI achieves what they believe is AGI, which is a highly autonomous system that outperforms humans at most economically viable work, at that point, Microsoft's access to such technology would be void. So the investment would basically go away and Microsoft would be on its own. So what you've had happen over the past year or two is Microsoft's actually invested a lot into their own models. And so they're training their own models. They're developing their own AI because just in case this happens. Now, this could also mean that OpenAI is way further away from, quote, AGI than we think. And I think we can look at model performance. I think that's probably the case. So OpenAI wants Microsoft and kind of the piggy bank to stay around and continue to invest, continue to offer server credits. And I think that's what this has to do with. It probably is the best for both companies. Now, OpenAI is pushing for more monetization efforts, and it has a new $200 a month plan. We'll see how many people sign up for that. Most users like you and I are probably going to sign up or keep signing up for the $20 plan, but we now have a $200 option. Now, CEO Sam Altman, he's either incredibly naive or maybe he's right. I don't know. But he's saying Elon Musk won't use his political clout against rivals. I don't believe that for one bit. Now, exciting news for advertisers. OpenAI looking to add advertising to its AI product. This kind of goes along with what we're saying with Google, how everybody's threatening to break them up. They've got this, monopoly in the ad business. Well, give it a couple of years. Let the lawyers stretch this out for 4 or 5 years, and then OpenAI's ad business might be like a 4th or 5th tier ad company, and then all of a sudden Google's monopoly might not look so fierce. Now, like we said, that OpenAI deal was so juicy and so good, and it's probably worth a lot of money on paper at this point for Microsoft, although it's a multi-trillion-dollar company, so it would take a lot to kind of move the needle there. But the FTC is probing this, and this frustrates me. It frustrates me that the companies can make these investments, and then 2 years later, the FTC can go in and probe the deal when it was already approved. Moving on to Tesla. Start of the week at 355, and we got in our Model 3. We hit that accelerator, and we were up 9.5% this week at 389, another 52-week high. These stocks are just, there's like no gravity. This damn thing's up 40% over the past month. Over the past 6 months, you're up 122% on Tesla. Where is everybody getting the money to put into these stocks? Maybe it's the fact that you got money market rates just dropping and everybody's moving in the stock market. Well, you got a Trump ally coming in to be the AI and crypto czar. This will be David Sachs. My understanding is he'll have about 130 days. If you work for the government in a formal capacity, you do have to divest away from your businesses, but they've made some kind of law here in the United States where David Sachs doesn't have to divest away from all of his very profitable companies, which he probably wouldn't do. He wouldn't want to do that to become the AI and crypto czar, but he'll become the AI and crypto czar for 130 days or so, the early days of the Trump second administration. If he decides to stick around, he probably will have to divest away from some businesses or put them into a blind trust or whatever. But that rule is bringing in some very talented people into the White House. You got Vivek Ramaswamy and obviously Elon Musk as well. And I tell you what, no matter what you think of these guys do have some talent and some brain power. Now, Delaware judge rejects Elon Musk multi-billion-dollar pay package. Now, many years ago, Elon Musk took a big gamble that he would be able to raise the valuation of Tesla to, I think it was over $650 billion at the time. And a $650 billion valuation for Tesla at the time would make it worth more than basically every other car company and make it one of the most valuable companies on the face of the earth. When Elon Musk signed that pay package, people said he was an idiot. He was stupid. He was silly. But if it did hit, he was going to get about $56 billion, the richest pay package in history. Well, history played out and Elon Musk was right, as he normally is. And this time he was right in a big way. He got his $56 billion pay package. This was approved by the board of directors. It was approved by shareholders as well. But for some reason, we have a judge that is rejecting his pay package. Now, this will likely continue to make its way up the courts, and the opinion that I've heard is Elon Musk will get his money. Now, China shipments for Teslas fell for a second month in a row. They fell 4.3% year on year to about 78,000 units in November. It's according to Chinese Passenger Car Association. However, Tesla notched 15.5% month-on-month growth in China for the popular Model 3 and Model Y vehicles. Inside of the country of China, you have a recent increase in subsidies by the Chinese government to attract more consumers to switch to EVs. Now, Fidelity, they marked up the value of its stake in Elon Musk's X by 32%. This is based a lot on XAI and some of the valuation that Elon Musk has been pulling for his XAI startup. Now, still well south, as you can imagine, of the $44 billion Elon Musk paid for Twitter. But I tell you what, he has added that and more by using X as a political tool over the past several months. And $44 billion is going to go down in history probably as one of the best purchases of all time. Now, moving over to the technical segment of the show. What else is new, guys? We've got a new, this is insane. We've got a new higher high on the S&P 500. It is like clockwork. In fact, we are still on this breakneck trend. So at some point, folks, there are going to be some red candles show up, and then like the Peter Schiffs and those types of guys will show up and be like, oh my God, I told you the stock market's going to go down. At some point, yes, we are going to come back and revert to maybe a slightly more normal trend. Right now, we are on a breakneck trend. That thing is continuing to hold. You have higher highs on the S&P 500. You still got a lot of money sitting in money market accounts and stuff like that. You got a decent segment of the United States that is sitting on a huge amount of equity in their home. In fact, I think like 40 some odd percent of people actually own their home outright. Unemployment is still historically low here in the United States, and interest rates, while they're, quote, high over and above maybe where they were in 2011 and 2012, they're still also historically low. So there's a lot of precedent why the stock market continues to move higher. Any pullback, I tell you what, you get like 18 cents a pullback in any of these stocks you probably should buy. I mean, look at this meta chart. This is unbelievable. We thought, man, maybe we can come back here to trend. I was thinking, we come back here to purple trend. No, we hit the reverse button, or this is really more not a reverse button. This is like the eject button out of those like fighter pilots when you're about to crash or whatever. Mayday, mayday. We hit the eject button and boom, confirmed a new higher high on Meta. So this thing pulls back like 50 cents next week, and you probably should buy it. Confirmed a new higher high. I mean, it was like pretty much confirmed on Apple. New higher high. I mean, you know what to do when you confirm newer higher highs. Higher high on Amazon. I mean, this is just unbelievable. Not just a higher high, but this is like a higher high with Netflix as well. Nvidia didn't confirm a new higher high on here. I actually took the lines off of this one because I had to take a picture of this chart. This one's still churning up a longer term trend, intermediate 10, shorter term trend. Nvidia is just looking absolutely fantastic. One company that doesn't confirm a new higher high is Google. In fact, some could say in the micro trend, you made a high, lower high, lower high. But I mean, we just looked at Meta. I mean, look what happened with Meta. Google's obviously got some black clouds hanging over it from a government perspective, but those things could loosen up. You get some Trump comments, get Commerce Secretary or whoever's kind of like DOJ, FTC kind of come in and maybe loosen kind of the pressure on Google. This thing would move to a new higher high, which would take you up basically to $200 on that one. Microsoft, oh, wow. So compliment yourself if you had bought this one. I had been nibbling on this one. I have multiple positions in Microsoft, some shorter term, some longer term. I had been nibbling at this kind of 407, 405 area for a while. Actually had made multiple purchases at that level. Well, we finally found footing here. We're moving back to the middle of the channel. If you're in kind of a shorter term view of this one, you probably want to take the profits probably next week on that one. And Tesla, oh, wow. My goodness. We have moved. I'm going to take this red box off. This was for a different video that I did. And probably this red line as well. Oh, my goodness. We are making a beeline up here to the all-time highs. That's up here at about 300. Well, maybe we'll call it 420, since I think Elon Musk would be appreciative of that. I mean, we're going to highs of 420 on Tesla. Those probably could be hit. I mean, look, as early as next week. And then remember what happened to Netflix. You had highs all the way back here in 2021. Once you broke through the 715 high, you rallied to 939 on no news, no fundamentals. I mean, shoot, the fundamentals of this business that Netflix in absolutely sucks. They put on that Tyson fight and half the people couldn't even watch the stream. It was terrible. The fundamentals around Netflix has been terrible, but the technicals have been absolutely sensational. We've seen other stocks do this as well. I think Palantir has made a similar move. Once you break through the highs of 2020, 21, there can be an anti-gravity moment. Same thing we've seen with crypto this week as well, more specifically Bitcoin, but some of the other meme coins as well. You break above 420, there is, in fact, meaningful odds in the favor of probably going to 520 on Tesla. This thing looks absolutely as strong as hell. Any dips in any of these stocks, needless to say, should be bought. Folks, that was the FAANG Stock Recap Show for Friday, December 6th. Hopefully you guys have a fun and safe weekend. Watch some college football. Watch some NFL football. Spend some time with the family. Have a good one, and we'll see you again next week. Good luck with your investments.